Hello, everyone. Thank you for joining us. My name is Daryl Urbanski, your host as always. And today we are joined by Niko Mercuris, co-founder and mastermind leader of Crypto Renegades, the #1 crypto trading program in the world. Niko has spent over 20 years investing in alternative assets. He's built 230 employee call centers, closed 7-figure real estate deals, and become an Amazon best-selling author. But nothing has matched the opportunity he found in crypto. Since launching Crypto Renegades in 2021, Niko has helped over 300 everyday people become 6-figure crypto traders using proven systems, real mentorship, and hands-on accountability. He rebuilt after losing millions in 2008 and now teaches others how to build, protect, and grow life-changing wealth in the new digital economy. And I've asked him to join us here today to share his story and help us profitably navigate the crypto world. So Niko, thanks so much for joining us, my friend. How you doing?
Thank you, Daryl. I appreciate you, and thanks for having me. I'm doing great.
Yeah,
Another
well, it's an
beautiful day
honor,
in
pleasure.
Florida.
It's a pleasure to have you here. So how did you even get into this? I mean, you built call centers, you got into real estate, you're in crypto. Take us through the journey. Like what were your parents doing? Were they entrepreneurs as well? Were they investors? Like where did you grow out of, so to speak?
Yeah, so I was more of a riches to rags story. My father, he was a successful restaurateur, immigrant from Greece, very low education, had to help his family, Greek immigrants, his parents. They came to Chicago back in the 1930s. And then my dad, he didn't really know how to do anything. I mean, he didn't have any education really, but he knew the restaurant business. He worked in restaurants. Greeks always own restaurants. That's usually how it goes. So he ended up starting a restaurant called the Never on Sunday in Indian Rocks Beach, Florida here. And this was in the 60s. Now, I was born in 1968. I'm 57 now. My dad died when I was 8 years old. So when we lived in Terra Verde Island, which was all beautiful waterfront houses, he had a big yacht in the backyard. And he was doing very well in the restaurant business, but he didn't plan for his death. He didn't plan for my mother and us children to pretty much survive his death. He was basically living day by day. He was a partier because he ran a supper club. That's what they were called back then, right? So he had all the celebrities come in and they had the belly dancers and the bazooka players, and it was Greek. His gimmick was he had a hot air balloon tethered to a rope at the restaurant. He would take people up in a hot air balloon, a couple 100 feet up, and then pull them back down and bring them into the restaurant. So people would come from miles to the hot air balloon, and they'd end up in the restaurant.
That's a
And
great idea.
I
Yeah.
thought it was. And long story short, my mother was a runaway. She ran away from home in like the 10th grade. She had an abusive mother, and he met her and they got married. So you got an immigrant with no high school education marrying a high school dropout. And then, but he was very successful. He had Rolls Royce in the driveway and a big yacht in the backyard. He was always entertaining. But when he passed away, my mother lost everything because he didn't plan for his death. The IRS came, the bill collectors came, and pretty much everything had to get liquidated. We had literally moved into a motel for 6 months before she got on her feet. The only thing she had was all of the antiques and furniture that she bought from garage sales and estate sales, because that was her hobby and passion. So she had to sell all that stuff. And in selling it, she made a lot of money, more than she paid for it. She realized that was her gift. That was her passion. So her and a girlfriend started a little antique store. They literally got a storefront, bought some more furniture, put it in there, and they started a business that turned into a jewelry business. And I was going into high school around this time, and I didn't want to go to high school. I hated high school. So I wanted to go work for my mother because I wanted to be a jeweler. I thought I was going to become a gemologist. Now we're in the early 80s and everybody's wearing gold and jewelry all the time. I still wear my necklace and my bracelets and stuff, but it's kind of funny because that's how I got my start. My first job after that was in the call center business, because in Florida, it seemed like everybody has a call center. The very first job we get here is telemarketing. So I went into the telemarketing office. I was 18 and I became the top sales rep there. I was not reading the script. I was doing things my own way. And they asked me, how am I doing so good? How am I selling this? So they wanted to take me off the phones and make me a trainer for the sales office. I started training people and increasing the sales. Then I became the general manager. And then the owner of the call center passed away. And the daughter took over, and she was very, she didn't know what she was doing. So I said, listen, I can do this better. So I went and started my own call center. And that's what I did for 20 years, really. I built a call center up from, just me and up to 150 employees at one point. Then it got up to about 220. I was so confident in what we were doing at the call center, and I knew exactly how I brought people in from a phone call and from an ad to the training room, to the sales floor. And I said, I can do this myself. So I went and leased a space And this is a good lesson for people right here is like, I leased the space and I had all the equipment set up. I had the booths, the stations, the computers put on all the stations, not one employee and not one product to sell. I did all this because I knew what I was going to do. And then I got a contract with the same company that I was selling for before to sell their product. And then I started running ads in the newspaper for employees. The phone rang. I answered the phone. I was the receptionist, Creative Solutions. Yeah, I'm calling about the ad in the paper. Come on in. So I would get all the people to come in for an interview. And I would book the interviews all for around the same time between 1 and 4 in the afternoon. And I was the one there giving the interview. So they would come in, I would take them back to my office, interview them, hire them, and I would schedule them all for training for the next day. When they came into training the next day, I was the trainer. I trained them and then I brought them into the sales floor. And then I got them all set up on the stations. I was the sales manager. Soon as I saw one person doing a little bit better than the other, I pulled them off and made them the manager to watch the rest of the salespeople and help them follow the script, listen to them, make sure that they were selling and that they can get up to par, while I went and interviewed more people. Eventually, I pulled another salesperson off the floor, made them the trainer. Then I finally hired a receptionist to take the ad calls, and then I hired someone to do the interview. So I first did everything myself before I replaced myself in each one of those positions. And then it was just a matter of managing the managers and overseeing the whole operation. And we built that up to $12 million a year within about 2 years. I thought I was doing really well, but my net income from $12 million a year in gross revenue, and by the way, this is from 1999 to about 2008. So a little bit of time ago, I was probably netting about 500, 600,000 a year. And I was living high on the hog. I didn't think it was going to end. I thought I was just going to expand, hire more people. This was easy. So I was spending money like a drunken sailor. I had a private limousine. I had a gated estate with horses and stuff like that, and really didn't have any money left over because I was spending it as I was making it. And so I learned a valuable lesson there as well, because when I lost $1 million a year contract with the call center business, it was at the same time, 2008, when the real estate market crashed, and I had about $4 million worth of investment properties that I bought at the wrong time. I bought at the height of the market. So I really got wiped out there and lost everything and had to start over. But relatively quickly built another business up. So I went from, this is why I say riches to rags. I went from, my father had money, but that I didn't have anything to do with that. When he died, we lost everything, built it up to multi-million-dollar business, lost all that, and then did it again. So I have some experience in a couple different niches now. And but during the call center business, I was getting into trading. I wanted to learn the financial markets. And so I sought out to find who is teaching how to day trade. And I found OTA, which is the Online Trading Academy, which is the elite academy that basically where all the hedge fund managers get their traders from. And it's about a $30,000 education. This was 20 years ago. Now I think it's like 75 or 80 grand just to go to OTA. But their goal is to get you to get a job at a hedge fund. But I didn't want to work for a hedge fund. I just wanted to learn what they knew. That's when I got into trading stock market options. And then right around 2015, crypto started becoming a thing. And I really didn't understand it, didn't know what was going on with it, but I bought like 50 Bitcoin at $300. And when it got to 9,000, I sold it and it dropped down to 3,000. I thought I was a genius. I was like, got in and out at the right time. And then right after it hit 3,500, it just bounced right up to 19,000, 20, 25. So I was like, what is this thing? So I started doing research. I found some decentralized trading platforms where I could literally trade Bitcoin futures contracts with leverage. And I never looked back. It was easier than trading the stock market. I loved it. And that's, I was doing it on my own for a couple of years until 2021 when I started Crypto Renegades. And that's never looked back. And just to correct you a little bit, we have about 3,000 members, not 300 now. Probably the information you have is probably 300, but we're about 3,000 members in our mastermind now, about 6,000 members on our Facebook group. But it's grown quite a bit. And we've helped several people become multi-millionaires in that group. And it is kind of amazing because it's one of the only things you can do with up to 100x leverage. So it's kind of like the Wild Wild West, but we do it with traditional institutional grade risk to reward ratios and using proper risk management.
I love that. That's a great story. There's so much I want to unpack from that. I love that your dad had a restaurant with a hot air balloon. That is just so ingenious, because you could get like a dancing balloon guy outside your store, or you could have a hot air balloon that everybody in the city sees and knows. And what a thing. You want to take your girl on a date. Hey, let's go to a restaurant and up in the hot, like it's just wow. That's just a great. There's so much to unpack here. So first, you said something, let's work backwards. What's a futures contract for people that don't know? You said you're trading Bitcoin futures contracts. What is that?
Yeah, so unlike stock in the stock market, back in the day when you used to buy a stock, you would literally get a stock certificate and you'd have to a physical certificate in your hand. But now it's not like that anymore. Everything's digital, everything's online. You buy stock on your trading platform like E-Trade, and you're controlling an interest or a share in that company when you have stock like Tesla stock or something like that. When in crypto, you can trade on a coin margin or a USDT margin. So you used to be able to trade on a US dollar margin, which is fiat currency, regular dollar bills, like you do in the stock market. But the crypto platforms got smart and they're like, well, we got to be outside of the centralized market, so we can't even use the government's currency. So you got to convert your US dollars into a stable coin, USDT, for instance, or USDC. And then you can trade that against Bitcoin, for instance. Now, there's hundreds of cryptos you can trade against, but let's just use Bitcoin for an example. So if I want to trade Bitcoin and I think Bitcoin is going to go up, I can go on Bitcoin, meaning I'm betting that the price is going to go up, and I'm using USDT as the stable coin or the currency or the dollar against it. That means that if Bitcoin does go up and I win, I'm accumulating more USDT. So I'm basically buying contracts. I'm not getting physical Bitcoin. I'm just getting contracts, and each contract is equal to one.
You're betting on the price. The price is going to go up or the price is going to go down in a certain time frame.
That's correct. We're price action traders. We're betting on the price. Now, on the platform that I trade on, we can actually trade on a coin margin, which means I can deposit Bitcoin or I can convert my USDT to Bitcoin right on the platform. And I can trade on a Bitcoin margin, which means that if it goes up, if I bet that it's going to go up, I go long, or I go short and I bet it's going to go down, and I make a profit, I'm actually making Bitcoin. I'm not making US dollars anymore. So I'm accumulating more crypto, more Bitcoin. And a lot of people are like, well, why would you want to do that? If that's been an easy answer for the last couple of years, because Bitcoin on average has been going up in value at a rate of anywhere from 50 to 100% per year over the last decade, whereas the purchasing power of the US dollar has been going down at a rate of 8 to 10% per year. Yes.
Yeah. And that's the official number, which is hogwash,
it's higher.
in my opinion.
Yeah. I don't even like to say what I think it is because people don't think I know what I'm talking about. But the truth is, inflation's a lot higher than people think it is, for sure.
Yeah.
And so, go ahead.
I would say there's just a lot of middlemen between the people that say it's 8 to 10% and what you're paying.
Oh, yeah. Some people argue and they say, oh, inflation's only 3% or 4%. I'm like, you have no idea.
What people don't realize is that you trade your life energy for money. And so I'm trading a part of my life. It's not a grim thing, but it's a serious thing. I'm trading a part of my life for the money that I'm making. And now the government is going to print money. And just by creating, it's like if you have a collector's item, there's only 100 cars. Okay, I got one. But now the factory's going to make another 100. Well, that just cut the value of the car I bought in half. And so people are like debating about how, and the reality is the people at the trough, the people that get the money first get to spend it at today's value, but your savings that you traded your life energy for are now worth less later. And that's sort of what's created this Ponzi scheme that we're in right now, where the currency is not even backed by anything, where it used to be fiat means let it be so. So it's what it's worth because that's what they say it's worth.
Yeah.
And I think a lot of people don't realize the state, like, I'm not a geopolitical expert, but I can explain a couple of things that are, I think, easy to grasp. I'm from Canada. In 2020, the Canadian government, they have a 1-year budget. Let's make it easy. It's $1 billion, just simple numbers. Okay. Let's say the government has $1 billion a year. That's their budget. Well, in 2020, they printed $50 billion. They printed 50 times their 1-year budget in 2020. And all the politicians and their buddies get that money at 2020's value and they go and spend it. And now the big issue and what's happening in a lot of the world, and this tariffs, all this stuff that's happening, some people are trying to blame certain people for this and that. I think what people have to realize is that, like, I'm living in Southeast Asia right now. And so now it's 2021 and people aren't stupid. And so now we have a Canadian company going, hey, I want to buy some of those coconuts. Those coconuts look great. And I go, okay, cool. I put my life energy into this and water and money and resources. So this is real value. This coconut, I can live off of it. I can make oil from it. I can use it for fertilizer. I can make use of the entire thing. So what are you going to trade me for this? And they go, oh, we're going to give you some Canadian dollars. And I go, well, what is a Canadian dollar worth? And now there's a big argument about what we think the Canadian dollar is worth because it's not pegged to anything. And I think it's a really important thing for people to understand is that the majority of the planet right now is running on currencies that are worth whatever your government says it's worth and whatever their friends like the G20, G7 agree to accept it for. And that has been the first thing that happened at the beginning of the Russia-Ukraine war was Russia said to buy our oil, you need to use an asset-backed currency, period. It can be their currency or someone, but it has to be an asset-backed. And that upset the apple cart in terms of the geopolitical state of the world. So just sorry if I went off to the sidebar there, but
no, you're absolutely right. Yeah, people don't get it. So they're like, well, what about what are we doing this for? Aren't we doing it to make money? I need the money. I want to buy a house. I want to buy a car. That's fine. But if you make a trade, and to that point you just made, if I make a trade in Bitcoin and I make Bitcoin, I can always sell it back to US dollar. And I can always transfer it back to my bank and go buy it and spend it on whatever I want. But the reason why I'd rather not trade on a US dollar margin or a USDT margin is because Bitcoin, like I was saying, was going up at 50 to 100% per year over the last 10 years, while the dollar purchasing power is going down. So why would I trade a valuable asset that's going up in value? As soon as I close my trade out and profit, I'm putting the money back into US dollar, which is going down in value. It doesn't make sense. So I would rather accumulate more Bitcoin so that when Bitcoin does get to $1 million, $2 million, $5 million, I have a lot more of it at that time. But yeah, like if you have $1 million just sitting in your savings account, everybody wants money. And don't get me wrong, I would like to have $1 million sitting in my savings account. But when that money is sitting there, it's losing purchasing power at a rate of 8 to 10% per year. So that means in 8 years, approximately, that $1 million is going to have the purchasing power of about $200,000 equivalent today. Whereas $1 million of the Bitcoin sitting in your Bitcoin wallet at an average increase value of 80 to 100%. Now that might go down over time. Maybe it'll go down to 50, then 40, then 30, then 20. But right now, about 80 to 100% per year. So let's just use 100% per year for the example. That $1 million of Bitcoin is worth 10 million in 10 years, where your cash is worth 200,000 in buying power. Everything gets less expensive the more Bitcoin you have. Now, I don't know if this is going to last forever, but as of right now, I mean, it's a finite supply. 19.5 million have been minted. There's about 21 million that will ever exist. By the year 2034, I believe 99% of all Bitcoin will have been mined, and the remaining 1% will take 100 more years to mine at a halving rate of every 4 years. And so that's something that will continue to go up in value over time, whereas the dollar won't. So I think that anytime you get money, regardless of what you do for it, whether you work for a business, you have your own business, or you have a job or whatever, when you get money, the faster you can convert that money into an asset that at least goes up in value or earns 10% or more, I would say 11% to be on the safe side, 11% or more per year. Otherwise, you're just breaking even or losing money. You got to make at least 10% per year on your money to break even with inflation. And so, and here's what most people don't do. They don't invest anything. First, they pay their bills, and then whatever's left, they spend. And the first thing you should do is you pay your bills, whatever's left, you invest, and whatever's left after that, you can spend. And if you can be disciplined enough to do that, you can accumulate something and grow something. I have over 300 units of apartment buildings. I like investing in real estate. I have some partners with that. And the cool thing about that is, well, let me just put it this way. If any of your viewers have any grand illusion about getting rich in this world, in this lifetime, and when I say rich, 5 million, 10 million or more, I don't mean just hundreds of thousands or $1 million, but $10 million, let's just say, or more, you better learn how to use leverage, because you do not live long enough to get rich the old-fashioned way. You can't save your way to wealth. You know, an example would be, I always talk about billionaires, but you get Elon Musk, 200 billion, Jeff Bezos. But let's just look at Trump. Love him or hate him, doesn't matter. In 2016, he had to prove his income when he became the president the first time. He made $600 million in 2016. His company did. Now, $600 million. Okay, that's nothing compared to Jeff Bezos or Elon Musk. But let's just look at that for a second. If you make $50,000 a year, it would take you 12,000 years to make $600 million. If you make $100,000 a year, it would take you 6,000 years. And that's if you didn't spend one dime the whole time. How do they do it? They do it with leverage. Elon Musk bought Twitter. He borrowed $40 billion. He had the money, but he borrowed against his stock portfolio. Jeff Bezos bought a $200 million yacht recently. He didn't sell $200 million worth of stock and get hit with a capital gains tax. He borrowed against his stock portfolio to avoid capital gains, bought the yacht, and is going to pay the loan back with the increased value of the assets being held as collateral. That's what we do with crypto. That's what Donald Trump did with real estate. He borrowed tens of millions from banks, bought undervalued properties, improved them, raised the rents, got them reassessed, reevaluated, reappraised, and then refinanced, pulled all the equity back out tax-free because you don't pay taxes on loan proceeds, use that money to buy more properties and over again using OPM, other people's money and borrowed money. And so that's how rich people get rich quick and faster, by using debt the proper way. And we do that in the crypto market as well, because we can take $1,000 or $5,000, put it in our trading account. We can hit the button and go 10x leverage, 20x leverage, or 50x leverage. So if I have $10,000 in my trading account and I want to risk 10% of it, which is only $1,000 of my own money that I'm risking, but I put the leverage at 50x, I'm trading with 50 grand. And I'm making a percentage gain based on $50,000, but the maximum I could lose on that trade is my $1,000. That's what I have. That's my margin. That's what I'm risking. But if I put a 10% stop loss under that, the most I could lose is 10% of my $1,000. So I'm really only risking $100 to play with 50,000. So
let's break this down for people that don't quite get it. What he's saying is that there's certain platforms that will loan you money. They've got a pool of money. They have a liquidity pool. And so they have it set up so you can make a trade and you can say, hey, I'm going to put up $100 or $1,000, but I want to 10x this. So now your 100 becomes 1,000, and the company, the platform basically loans you that money. And this is all instant, and you do your trade. But you put a stop loss, which means that if it drops 10%, all I lose is my $1,000 because it's going to automatically trigger the trade then. But now, if I'm trading $1,000 and I've only put in 100, it only has to go up 10% for me to double my money.
So if I have $1,000 at risk and the price goes up 5%, or let's just use 10% because it's easier for some people in math in their head. The price goes up 10%. So Bitcoin goes from, $100,000 up to 110, let's just say. So it goes up 10%. So I would only make 10% of my $1,000, right? Because the market I'm only risking $1,000. But if I'm at 50x leverage, I'm making 10% times 50. Yeah. Well, this is why we coined the phrase the crypto wormhole, because we're collapsing time. We're using leverage, which allows us to get a lot further along in a much shorter period of time, because the market might have only moved 10%. But if I'm using 50x leverage on my $1,000, then I'm making 500% gain on a 10% move in the market. And that is extraordinary. And you can't do that really anywhere else. And one more analogy is, it's like a lot of people can understand this, is real estate. So let's say you want to buy a house. Here in Florida, the average house around here is about 500 grand. They go up from there depending on whether you're close to the water. But let's say $500,000. If you had to save up $500,000 to buy a house, and there were no banks to loan you money, no one would buy houses. It would take forever to save up that kind of money. But you can put 20% down or 10% down, maybe even 3% down if you got good credit. So let's say you put 10% down. Okay, so you put $50,000 down to buy a $500,000 house. Now you're controlling a $500,000 asset with only $50,000 out of your pocket. Much more manageable. Now, if the value of the house goes up 10% per year over the next 10 years, which is the average around here, that house will be worth $1 million. It'll double in value in 10 years. And you'll still owe the $400,000 or $450,000 you borrowed, but you've paid down the mortgage during that time. And so who gets all that equity? You do. Not the bank just wants the money they loaned you back plus interest. Now, if you were to refinance that house at $1 million, take an 80% mortgage on it, refinance, you would pull out $800,000, pay back the $450,000 you owed the bank, and you would put $400,000 or $350,000 in your pocket, tax-free, loan proceeds. Now you're going to say, yeah, but my loan payment will be bigger because now I owe $800,000 instead of $400,000. Well, yeah, but this is what real estate investors do. Then you rent that house out and let someone else pay off that new mortgage. You take the $350,000 or $400,000, you buy another one or two or three or a 5-unit apartment building. And that's how you do it, by using OPM, the other people's money, the bank's money in that example. But we do that with the crypto. You can do it with the stock market. And that's the only way, guys. It's the only way that the rich people get richer. And also for tax reasons. The reason why they can literally pay no taxes, a lot of people get mad at rich people or tax the rich. That makes no sense at all, because the reason why they're not paying taxes is because they don't have income like you do. So Jeff Bezos is notorious for having a $100,000 a year salary. He's a multi-billionaire, one of the richest guys in the world. He pays himself $100,000 a year. That's what you're going to tax if you tax him. So he's going to pay just as much tax as you on $100,000. The $200 billion that he's worth is in stocks and bond. He doesn't take that money out. He borrows against it, and you don't pay taxes on loan proceeds. So Rich people have been getting away with this forever. The good thing is that we can all do the same thing. The law is written for you to take advantage of it. And so all you got to do is learn how to do it. How do you leverage for the right thing? And the problem is, though, as you know, Daryl, people leverage the wrong things. They borrow to buy depreciating assets
or something. Yeah, I'm going to borrow some money to buy this car that's going to be worth 30% less as soon as I leave the car lot.
It's got to be appreciating assets, guys. It's got to be things that go up in value over time, not go down in value. So you see these people buying Lamborghinis, and the car, I could have bought a Countach back in the 90s for, it was $89,000. That was ridiculous back then. I mean, to spend almost $100,000 on a car back in 1990, basically 1989, I was like, that is a lot. I don't think I can swing that. And my business was doing good. And had I bought that car and kept it, it'd be worth almost $1 million right now. So some cars go up in value over time. Watches, I'm a watch collector. I don't have mine on right now at the moment, but I like nice watches. But I only buy things that I know are going to hold their value or go up in value.
Well, that's because you lost your first million. I'm on the rebuild swing. So I was talking to a buddy with his mastermind group, and we kind of came to the consensus after speaking to everybody in the room that it seemed like nobody in the room was allowed to keep their first million. And it's really just because you make it, you don't know how to manage it. Like you said, you just think the gravy train's not going to end. I figured it out. I'm so smart, all this sort of stuff. And so, you know, a fool and his money are soon parted. So, you know, you don't get to keep your first million. If you're smart and lucky, you get to keep your second million. And for a couple of people in the room, it took them their third million before they finally figured out, like, I need to stop being an idiot. And so I love this. You're basically taking the idea of real estate. I can buy with a percentage of its value as a down payment and then sell it and leverage other people's money. And it doesn't have to increase that much for me to make a more significant increase on my down payment because the value of the asset is bigger. And you found a wormhole, as you described, to do this with crypto, where you can do a leverage bet. I'm putting in $1,000, but I want a 50 exit. So that means I'm trading 50,000, but I put a stop loss in. So if and when the price drops below this, sell it. Now there's still risk involved because it can drop below 10% fast, but you try to average it out over time.
Yeah, so we use proper risk management. And so the goal is to become a consistently profitable trader. But if I'm averaging 65 to 75% win ratio, which is what our average is, we got people in our group that are 80, 90% sometimes. But I would say I'm probably around 70%, which is considered high in the trading world. That means if I make 10 trades in a row and I win 7 and I lose on 3, you're never going to win on all of them. And I don't even care that I lose on the 3. Because I have a strategy, I know what the strategy is, and I know what I'm doing, and I know where technical support is telling me to enter and exit the trades. We got supply and demand, we got the liquidity pools, we got a breakout of resistance or support, we go long, and then we put our stop loss in. But if I take 10 trades in a row, and on the 7 winners, I make $1,000 each, and on the 3 losers, I lose $150 or $200 each. Okay, so I'm losing $600 on the losers, and I'm making $7,000 on the winners. So I'm netting $6,400 out of every 10 trades, let's just say as an example. And just so people know, I mean, you know, we got guys in our group that have $6 million in their account and they make Ferrari money almost every single day, like it's nothing. And, you know, and it's all based on what you have in your account. So if I have $1,000 to my name in my trading account and I'm risking 10%, I'm risking $100. And then if I put a 10% stop loss on that, I'm really only risking $10. And if that trade goes up 100%, I have a great, but I really only made $100. That's not enough to retire me on. The same person could be in the exact same trade, taking the exact same signal, and he's got 500,000 in his account. He's got 50,000 on that trade instead of 1,000, and he's at 10x leverage or whatever, and he doubles his money, makes 50 grand on that trade. So that day he made 50 grand, and he does maybe a trade like that every other day or so. So if you do that 2 or 3 weeks out of the year, you're making $1 million a month or more. And some people are doing that like it's nothing, but they didn't start out that way. They start out with maybe $3,000 or $4,000 in their account, and they slowly grew it by having consistent wins, and their account gets bigger and bigger and bigger. And the key is that you don't change your risk to reward ratio. This is where people make a mistake. They get greedy. This is the 2 main killers in trading. It's fear and greed. And if you could just control these 2 emotions, you can become a very good trader. And a lot of people think that, oh, that's easy. I can control my emotion. I can do it, Niko. Even if you put cupcakes in front of me, I won't eat them. If I say I'm not going to eat a cupcake and you put one in front of me, I won't eat it. Okay, that's fine. You can say that. But when it comes to money, money is one of the most emotional things that there is. And we've been conditioned from the time we were little kids. Money is evil. Money's hard to get. You got to work your ass off for it. You got to pay your dues. Your mother and your father said no. Probably the word that you heard most growing up is the word no whenever you wanted something because they couldn't afford it or money was a problem. So money is something that we're very attached to. And when you flip over to becoming a really good trader, you literally detach yourself emotionally from money. Like, I don't care if I lose or win because I'm using proper risk management. And if I lose, I don't cry over it. It is what it is. And it's like any business, and you have to look at it this way, because if you were to open up a donut shop or a car mechanic store or a hair salon or whatever, you would first have to lease the space. That costs money. You would sign a lease. You would then have to decorate the place. That costs money. You would have to buy all the equipment and buy all the supplies and then run ads. And then people would have to know you exist. You'd have to get your signage up, all this stuff, right? You bought 50 grand into this coffee shop before you even open the door. The customer comes in, buys a cup of coffee and a donut. You just made $7. Congratulations. You're $49,880 in debt still. And how many more sales are you going to make before you even break even? Is it going to take you a year or two before you even get your money back if you're lucky? And you got to go to work every day and stand there and sell this coffee, or you got to hire someone to do it for you, which is going to cost you money. Business is very expensive. And I'm sure that you got a lot of business owners and entrepreneurs that watch this who understand that. So if you're entrepreneurial minded, you already know whatever you do is going to be a risk. It's going to take time. And what do they say? 80% of all businesses fail in the first year. And then I think 50% of all the businesses that don't fail in the first year fail in the second year. So it's like, it's a rough world out there, guys. We know that. So you have to be different. Just like if you want washboard, you got to do the opposite of what 99% of the people are doing. You got to make walking in the morning consistent. You got to stop eating sugar and carbs. You got to exercise, and you got to be strict. You go out to dinner with your friends and they're all ordering desserts and everything. And you got to eat your little steak.
You got to be a process person. You got to detach. Yeah. I think I'm the only person at the gym that I don't live stream myself working out. I don't take photos and I don't look in the mirror. It's about the process. And that's how I am with business and work. And see what you're talking about by detaching from fear and greed. You're like, I have a strategy, got a process. I'm not trying to figure it out because I'm learning from people who have been there, done that. And I'm following the process. And you almost have to be like a scientist about it, where when you do an experiment, there's a distinct beginning, middle, and end. Maybe you're going to make a pivot, but it's at a certain time. And then at the end, this is my process. I'm going to do this every day for 2 weeks or whatever it is. I'm going to follow the discipline, the process, and I'm going to detach from the outcomes. And I'm just almost like a robot going to follow it to see if I get the output.
If you can do that, you'll do very well. But a lot of people, what they do is they'll come in, they'll follow the process for a little while, and they'll have a killer trade where they'll make 10 grand. And they're like, oh, that was easy. Well, I'm going to risk 20% or 30% next time. I'm going to try to double my account on the next trade. And that's when they give it all back. They didn't follow proper risk management. And if you just follow it's like the tortoise and the hare. Is that the way you say it? Tortoise and the hare? It's like that. A lot of people think they're going to get there faster by taking shortcuts, but the person who grows their account the biggest in the shortest period of time is the person who didn't take the shortcuts, and they follow the steps, like you said, the process. Everybody wants the event. Everybody wants the results in the event, but they don't want the process. Nobody wants the process. And unfortunately, that is where not only the learning is, that's where the skill set is learned, but it's absolutely mandatory. And a lot of people tell me, I tell them when they come in our group, I'm like, see this video, the third video down, the mindset, trader's mindset, please watch that. And a lot of people skip it because we can see who watched and how much they watched in the back office. People skip that because they don't think they need the mindset. They're like, I'm already motivated. I'm already excited. I already know I want this. I'm money hungry. Okay, but you don't understand. The mindset of a trader is for you to become emotionally unattached so that when the market is falling, you're not, oh my God, FOMO, and you got to jump in and try to catch a falling knife and get burned on the bounce. If you can't just, oh, I missed that trade. Okay, I'll wait for the next one. Are you the kind of person that when the bus is coming and you're 200 yards away and you see it pulling up, are you going to run your ass off to try to catch it? Or are you just going to wait for the next bus?
Right.
I mean, I guess
it
depends
surfing.
on how.
Well, yeah, wait for the next one. I missed that wave. I bet I got to wait for the next one. Yeah,
yes.
There's an endless sea of opportunity.
Endless.
Yeah.
And the next trade setup comes 15 minutes later. So it's like, but this is the thing. And this is why it's good to be in a group of people that understand this, because a lot of people are just so anxious to trade. They're like, Niko, when's the next signal? Niko, when, should we get in Bitcoin right now? Should I go long right now? I'm like, calm down, grasshopper. It's winding into an apex. And I draw the lines and I show them. I say, when it breaks out of this apex, either to the upside or the downside, it has to then retest as support. And then if it bounces there, we will go long. If it breaks to the downside and retests as resistance and bounces there, we will go short. But until then, you sit on your hands and wait and watch. And some people just get they can't do it. They don't have the patience. But if you can just relax, you'll make a lot of money. And by the way, guys, I know I talk a lot and I give a lot of analogies, but I don't know of anything else in the world. Otherwise, I'd be doing it. And I am doing a lot of things. I have real estate. I have a coaching and mentoring business. I teach what I love to do because I'm doing it anyway. I'm not one of those people that teaches something that I used to do. I'm teaching what I'm doing every day. I'm making money live right in front of our members, sometimes tens of thousands of dollars every day right in front of their eyes. And I love doing it, and I will do it regardless of whether I'm teaching. And the point is, if you're going to do something like this, I don't know of any other business or any other job or anything out there that you can do concurrently, simultaneously with anything else you're doing. Right. Other than because everything else requires products or services. You got to deliver a service or a product. You got to inventory the product. If you're selling something on Amazon or Shopify, you got to run ads. You got to do a lot of different things. But with trading, all you need to do is open up an account. All you need is a internet connection and a device. Open up an account, make a deposit, and then enter positions at the right time. Understand when to get in and when to get out. And you can do that in your car, at a red light, by the pool, in your pajamas, in your bed, at your kitchen table, on vacation at a hotel. So there's really no limit. And you can do it while you're working at another job or during your business hours that you're running your other business. So there's really not many other things you can do to add an additional 6 figures or more to your income stream, in my opinion.
And how much time does it take? How much time are you talking about? Like, if I want to do this on the side, is this something I need to spend an hour, 3 hours on a day? You're just looking for one setup a day? I am so green behind the ears on this stuff.
No, that's a great question. We tell people, like, at first I ask people if they have a television. Most people do. I ask you, how much did you pay for the television? So you can just answer these questions in your mind. You know, most people, $1,000, $500, $2,000. The answers are all over the place. But that's not really what it costs you. If you spend 4 hours a week watching television, 4 hours a week, not per day, but per week, you are leaving 6 figures or more on the table, because you can make 6 figures a year trading on less than 4 hours a week. And so anything more than that, you can just get better faster. That's all.
Wow, it's powerful. So I think the biggest thing is when you're getting, and I don't want to mean to put words in your mouth, but what you don't want to do, it's the same almost like with paid advertising. If I have no background, no experience, don't know what I'm doing, and I'm just going to figure it out and I go into Facebook ads, I can spend a lot of money real fast and have nothing but a hole in my pocket. And it sounds like that's sort of what this is like. You can go in and you're basically just paying someone else who knows what they're doing.
Yeah.
So get started, you want to have some basic frameworks to work with.
Yeah. I mean, if your choice is go and try to learn things on your own and open up a trading account and trade and try to figure it out, or pay for coaching and mentoring, I would say get the education first. And I'm not saying that just because I'm a coach. I would say do that no matter who you go through, no matter who you work with. Find someone who's legitimate, who's got a proven track record, and learn the skill first before you go throw money away trying to make money yourself. Because there are very simple things that most people don't understand, and that's why they lose money. Mm-hmm. And I will tell you this, there's a lot of very successful traders who make a living trading who did it that way. They did it the old school of hard knocks. But the percentage of people that end up becoming successful doing it that way is a very small percent, because most people give up or quit. The people who succeed blow up multiple accounts. And when I say blow up, I mean they put 1,000, 10,000 in their account, run it down to zero, go and deposit more, 5,000 this time, and they run it down to zero. Then they go and deposit more. They know it works because they have successful trades. They see other people doing it. So the reason why people keep doing that is not because they're suckers. It's because they had winning trades. They made a lot of money, but they made mistakes. And they're like, shit, next time I'm not going to do it that way. I know what I did wrong. I'm not going to do that again. And they finally narrow it down to where they're not doing anything wrong. They're not making any mistakes anymore. And now they become consistently profitable. But the percentage of people that do it that way and ride it out until they finally become successful is very small. However, the people who get the proper training, they understand risk management right from the beginning. They know exactly what they should do right from the beginning. And we eliminate all those mistakes you would have made had you gone on your own right out of the gate. At least you'll know what they are. So when you do make them, which you will still, you will know, okay, well, he did tell me not to do that, and I did it anyway. And that happens a lot. You know, I use analogies a lot. And I'm like, listen, you can tell a kid not to touch the stove or not to stick a fork in the light socket, but until they actually touch the stove and get burned, that's when they will really learn why you told them not to touch the stove. They lose their first million. It's a rite of passage. You almost have to lose some money trading to understand what you did wrong. And it's like learning how to ride a bike. You're going to fall down. You got to learn how to get up, and you got to learn how to control your balance before you start to get the hang of it. And if you can just do that, guys, there is no limit. Believe it or not, there are guys and gals out there that make hundreds of thousands of dollars per day, not per week, year, or month, or in decades, per day. Like it's nothing. And we see it all the time. Like, oh yeah, I would have made 200 on this trade, but I only made 120,
Yeah.
120,000. Like people are spending their whole year working their ass off for a boss for that. And this guy made it in a couple of hours trading. And so, you just got to learn that skill because anybody can do it.
Well, I think it's, if you use an analogy, there's one guy that's going to figure it out, reading some books, watch some YouTube videos, getting a buddy in a garage. He wants to win a gold medal in judo at the Olympics. And so I'm going to get a buddy. We're going to watch some YouTube videos, read some books, versus the guy that goes, okay, I'm serious about wanting to win a gold medal. I'm going to go get a mentor who's already won a gold medal. In fact, I'm going to get 2 or 3 gold medalists who had won golds at the Olympics in the event that I want to win. That's just a no-brainer. As a parent, you mentioned being a parent. I can just let my kid crawl all over the house, or I can create a safe environment and then they can go crazy. And that's almost like the number one rule of investing is get your money back. That's everyone's focused on, I want to make $1 million in an hour.
Yeah.
But the number one rule of investing is don't lose money. Get your money back. Just get it back. And I feel like it's almost, that's the biggest, and we kind of gave people that, the 10% stop loss, but I think you need the strategies to play in. If you've never baked bread, just follow the recipe. And then once you've baked 30 loaves of bread, now you can add raisins and whatever else you want because you understand the basic template.
Yeah. And it really is that easy. I mean, at first it sounds confusing, sounds complicated. When you look at a chart, it looks like a whole nother language. And people are very intimidated by that. And I tell people it is like learning another language. But if I offered you $500,000 cash at the end of 12 months to become fluent in another language, how many of you would do it? Like knowing that you were going to get 500 grand at the end of 12 months, if you could just learn Spanish fluently, or pick a language, but let's just say Spanish, and you don't know Spanish. Most people say, oh my God, I want to learn Spanish anyway, but if you're going to pay me 500 grand, what would you do? Would you hire a coach? Would you hire someone to get on Zoom with you and help you and make sure you do it? Would you maybe hire someone to come stay at your house and literally teach you in person, like a piano instructor would teach someone playing the piano? If you really took it seriously, you could not only become fluent in a few months, but here's the cool thing about trading. You don't even have to become fluent. You know how many immigrants come over here, barely speak English and become millionaires? They don't even know the language. You don't. So my point with that is that you can just barely understand the language of trading and still make a fortune. Imagine if you got good at it. And so, like baking a cake or driving a car, when you did it the first time, guys, I learned how to drive a car in a 1976 VW Bug stick shift. I was looking both ways. He was telling me to, okay, put it in gear and let the clutch out slow. I stalled and the thing wouldn't start. And I'm in the halfway out in the road and cars are honking at me, nervous as hell, not knowing what to do. Heart rate's. But 60 days later, I'm doing 60 around a corner, steering with my knee, eating a cheeseburger in one hand, drinking a soda in the other, not even thinking about it. And that's just the way it goes. You start out nervous. You start out not knowing anything. Within a very short period of time, you get the hang of it. And before you know it, you don't need us anymore because now you learn how to find trade setups. You learn how to enter and exit yourself. So you don't even need my signals anymore. And you can go find the trade yourself. And so that's the goal, is to get you to become proficient and independent.
Yeah, it's powerful. And you've got a training that you mentioned, I think. I don't want to put words in your mouth, but you have a training that you sold that you want to give to people to help them if they're interested in trying to figure out just some of the basics.
Yeah, we have a program right now. We did a 5-day challenge. Obviously, we have our mastermind. It's a little bit more expensive. It's lifetime access. But what I'll do is I'll give any viewer of yours here on this podcast who reaches out to me, sends me a DM on, let's say, Instagram. Just make sure that if you reach out to me on social media, Instagram or Facebook or YouTube, make sure it's with the little blue check next to it. I have a bunch of imposters already pretending to be me. So you make sure you find the real me. It is Mercuris on Instagram. Send me a DM and I will give you $1,000. It was a coaching program that we did. It was a 5-day masterclass, 5-day workshop where we're basically walking people through step by step. And we've added a lot of videos, a lot of training to that, and 2 live calls per month in that group. It was $9.97. I will give that to your viewers unlocked for free. If they just DM me, I'll send them the link for that. I'll also give them a link to my next, depending on when they message me, to the very next upcoming live webinar that we do, where I'm usually on for 2.5, 3 hours, trading live, explaining what I'm doing, teaching, talking about exactly how we do everything. And of course, at the end of that, we do let you know how you can work with us, but no obligation to do that either. But that webinar is free and we're trading live for free and I'm explaining everything. So it's definitely a good way for people to see if this is for them or not and actually see how we're doing it. Because I think once you see me make hundreds, if not thousands right in front of your eyes, pushing a couple buttons, you might be like, oh shit, I can do that.
Yeah. That's huge. So check him out, Niko Mercuris, Mercuris. That's Niko Mercuris. One more time. Niko, like Mercury, Niko Mercuris. You can also find him, I think, on LinkedIn and Facebook. Make sure you got the real one. Never buy any coins. He's never going to sell you a specific crypto coin. And if he does, ask me to check for sure. But right now, you can go get $1,000 training for free.
I don't take your money. I teach you how to do it yourself. And we tell you what platforms to use, how, to do it the right way. We included also in that free training program that we're going to give you is a whole module on how to avoid scams, because scams are prevalent in the crypto space. So there's a whole module there showing you exactly what to look out for if you ever get this, or anybody offers you this, or you ever see an email for this, or it's a WhatsApp. Stay away from WhatsApp groups. Those are all scams. So we break all that down for you too, so you know exactly how not to get scammed. And unfortunately, that's another rite of passage. A lot of people get scammed for the very first thing in the crypto, and then they learn from that. But there's no reason to go through any of that.
Yeah, no, I'm a believer. I always stayed with real estate and business because it was tangible. I could put my hands on. But my brother-in-law, my wife's youngest brother, grew up Filipino, like in rural Philippines, turned $500 US into $150,000 trading Solana meme coins because he found a good mentor and did it. Now he doesn't do it anymore because he says the market's changed. And so he's in university, but he's trying to figure out, what do I do with my life? Because he's got 150,000 US in a bank account. And he's going to school learning from teachers that make like peanuts compared to what he eats. Like, what do I do with this? But I'm a believer that there's money to be made, and that if you have the right strategies, it'll work, because I saw it with him.
Oh, absolutely. Just remember, the guys that are flying in from the Hamptons in their jet helicopters and landing on the top of buildings are trading options in the stock market, making millions of dollars every day for these hedge funds. They don't want you to know how to do that. They make it complicated on the news, CNBC and all the business networks. They show the charts. They talk about derivatives and things that just don't make sense to people. And they try to keep it confusing, guys. But when you understand what they're doing, you can do it too. You do it on a smaller level and grow it to whatever a level you want. First of all, you got to want to do it. And second of all, a lot of people are like, well, I don't have a passion for that. Well, what is your passion? I always tell people, what is your passion? And wouldn't you be able to follow your passion and do what you're passionate about if you had a lot more money? And so we do have to make money in this world, unfortunately. So pick a thing that makes the most money in the shortest period of time, even if you don't love it to death, because that will fund your passion.
That's a great tip. Niko, this has been a great call. I've got a couple pages of notes. Is there anything that I haven't asked you that I should have asked you?
Man, I don't know. I didn't tell you about my mother's animal rescue facility. She has over 100 tigers and lions. We didn't talk about that, but that's unimportant. That was part of my little growing up phase. She's retired now. She donated them all to the North Dakota Zoo. But no, I don't think so. I love what I do. It's the Crypto Renegades. You can find us on Facebook. But if you just message me, I'll give you guys the link and connect you with all the links you need to stay in touch with us, get in our Facebook group, and learn from us. And I'll be happy to help as many people as possible. We love it. And I think you'll get a lot out of it.
Niko, thank you so much for joining us today. Guys, go check him out. Niko Mercuris, Niko Mercuris. Let him know that I sent you there. Get access to the $1,000 training for free. It's going to teach you the basics of this, if this is something that resonates and interests you. Niko, thank you so much for coming and sharing with my audience. And I know you've got your own following, your family, your community. Thank you for coming and sharing with us so we can all navigate the crypto space better.
Thanks for having me. And I highly recommend everybody make sure they give you a good review, because you're bringing a lot. I've watched some of your podcasts. You're bringing some awesome people on and sharing their information with people. So kudos to you as well. And I'm definitely going to support your channel and refer people to you as well.
Thanks, man.
Yes, sir.